Mortgage rates above 7%, low inventory, and rising prices. Just this week, pending home sales are down 14%. Now, that's a 14% decline from a year ago. Joining us now, we want to bring in Glenn Kelman. He's the CEO of Redfin. So, Glenn, the big question is here is what is this cooling effect? How big of a cooling effect is this going to have on the housing market? What do you think?
Well, rates have been high all year. They peaked in August. They seem to be easing slightly now. So I don't think sales volume could go any lower. And prices are actually headed up because inventory is down. So I think the market is in a holding pattern, waiting for a break from the Federal Reserve.
As are so many other sectors, Glenn.
Yeah.
It's been interesting to see how home buyers as well as builders have tried to work around the rates as well as inventory levels. We have seen an incredible buildup in new construction, new homes. You've talked, though, about this generational shift that is happening right now as a result of lack of affordability, as well as just the lack of opportunity to buy homes. I wonder if you can touch on that, because, we sort of talk about homes day in and day out, but what is this long-term shift that we're seeing as a result of where we are today?
Well, it's decline in the American dream, isn't it? At this point, 30 years ago in their life cycle, baby boomers own more than 20% of U.S. national wealth, whereas millennials own less than 10%. And it's simply because millennials can't afford a home. We pulled the ladder up just as millennials were coming of home buying age. Home prices shot through the roof, then rates shot through the roof. And now there's so many people who want to move and can't. There is still unfinished business in this country where people want to leave the coastal cities for less affordable parts of the country, but those for more affordable parts of the country. But now the more affordable parts become less affordable too. And so really, it's just a case of arrested development where people who want to move can't. And it's a tragedy.
So then, Glenn, how does this play out?
Well, you just see lower household formation, more people living with mom and dad, shacking up with roommates instead of striking out on their own. It's one reason why family formation is down. People aren't getting married as much. They aren't starting families and having children because they just don't have the living space to do this. And so I think that housing is a basic human need. We are going to see more people looking for homes. The real issue is inventory. There's so many folks who want to move up who aren't putting their homes on the market because they can't even afford the place they have now. Interest rates have gone up so much. They are loath to leave behind that 3% mortgage rate. And so the real crimp in the industry isn't actually demand, it's supply. There's not much of either, but there's especially low supply with new listings down more than 10% year on year. And that was from a low in 2022.
Glenn, what has all this meant for your business on Redfin?
It's been a wild ride. So sales volume is around 4.1 million units, and we've had to make adjustments just because we employ our real estate agents, and that means that we have to keep them busy. So we went through a couple of layoffs at the end of last year. We're doing better now. We expect share to increase in the second half of this year, but it's been very disruptive. And yet, we still believe there's just a better way to buy or sell a home, that you could sell it for 1%, that you can get better service, that you can click a button to see into a property, to go tour it. So all of those things are still true. It's just hard to be a publicly traded company when you're in a very cyclical, seasonal business. We're going to see it through, though.
Glenn, when it comes to those people who are still out there looking for homes, they're still maybe among the buyers that are able to afford this. What's the demographic there? What are you seeing in terms of the people that are able to afford and where they're buying?
Well, some of them are Nepo home buyers, people who are borrowing money from mom and dad. So traditionally, America has had more class mobility than anyone else just because we've had more land. People have been able to buy into the American dream with a very small down payment. But because we tightened credit after the great financial crisis, and now we've got rates where they are, the only people who can buy a home often are the people with cash in hand. And that either means older people or children of wealthy people. So we're just seeing an increase in cash buyers and a decrease in everyone else who has to get financing.
What about for developers? I mean, are you seeing, sort of investors kind of pull out of the market because the upside isn't as significant, the inventory or the opportunities just aren't there? What are you seeing on that front?
Well, it's a tale of two investors. So the home builders are doing really well. A third of new listings are new construction listings because traditional listings that are coming from people who own a home just aren't on the market. People have decided to stay off the market because they want to keep that 3% mortgage. And so the builders have really got a monopoly on the attractive inventory, and more people than ever are buying new construction as a result. But if you're talking about investors who are Airbnb investors, where they're buying a home and flipping it, for the first time, we've seen them come under some duress. If you go to these really bubbly markets like a Boise or an Austin, they haven't been able to get the rent. They're trying to sell the property, and sometimes they're bringing cash to the closing table. Mostly, we haven't seen the kind of distress that marked 2008, which created all this inventory when no one else wanted to sell, foreclosure, short sales, and all the rest. But the investors who are trying to make a mint by creating an Airbnb empire are, in some places, just a few, starting to get upside down.
Glenn, going back to what you said earlier, when we talk about the tight inventory, obviously pushing prices higher, how much higher, I guess, how much longer do you see this trend staying intact?
Well, you tell me, when is the Federal Reserve going to lower rates? I know that the employment numbers eased a little bit, but mostly it's really a tale of two economies, too, that the rest of the economy is doing really well, which means that the housing economy isn't likely to catch a break by the end of 2023. Rates are going to stay around 7% or higher for the rest of the year, as far as we can tell. And I think until we get some rate relief, we're not going to see more inventory because people are going to want to hold on to their loans. And we're not going to see that much demand because so many people just can't afford the mortgage payment. So it's going to be a holding pattern, at least through the rest of this year and probably into 24.
Extremely challenging time here for the housing market. Glenn Kelman, always great to have you, CEO of Redfin. Thanks. Have a good weekend.
Thanks for having me. Have a good weekend.